Let me get in Mr. Raamdeo Agrawal, who's been patiently waiting for a chat on what he's making of this market. Joint Managing Director at Motilal Oswal Financial Services. Mr. Agrawal, good morning. Thanks for joining in. Prashant here. After the correction we've seen, how are you positioning, and are you sort of seriously rethinking issues such as inflation, rate tightening, etc.? Because that has been cited quite frequently as being the reason for this fall, as being the reason for this correction. Is that really so? Because these things have been around for some time, and suddenly they're back in center stage.
Yeah, for everything you get a tipping point. So I think this onion crisis, scam, first the scam thing started, then inflation in any case was uncomfortable. It was expected to come down by December or so. And instead of coming down, actually food inflation has started reversing back. So I think, and then political situation, the kind of headlines you get from Delhi, nothing seems to be very comfortable. So JPC is still stuck. So, onion thing was, I think, the last thing which really broke the back. So market is clearly getting derated because of cumulative events like this. We enjoyed through the year and for last 2-3 years massive re-rating of Indian markets compared to other markets, but now clearly India is getting derated for its own reasons. So if you, in the market correction, banks have taken the maximum hit, autos have taken the maximum hit, mid-caps of course never came up, and infrastructure, real estate and some of the other allied sectors never participated to begin with. Yeah.
From here, how do you assess sort of opportunities in this market?
Yeah, clearly the interest rate sensitive sectors like banks and automotive, they have been worse sufferer, and in the past also, if you look at it, they were the maximum risers also. SBI went up to about 35,000-36,000 on Diwali day. And from there it has fallen more than 25-27%. So the rise was also as rapid as the fall. So my sense is that these sectors have tremendous potential, and it is clearly going through a corrective phase. And just because it is getting corrected, that the long-term prospect of these industries are not impacted at all. Yes, there will be change in the interest rates, there will be some volatility in their earnings, but I think broadly the outlook for the banks, outlook for the automotive companies long-term outlook remains to be pretty solid. This deep corrections, whenever it stops, this entire phase might give a good opportunity to relocate these stocks at those new prices.